Imagine waking up one day to find that your entire life savings have disappeared overnight. Sounds like a nightmare, right? Well, history is full of financial disasters that wiped out fortunes in the blink of an eye. But here's the real question. Are we heading for the same mistakes in 2035? And more importantly, how can you protect yourself? Let's dive in. Over the past 30 years, we've seen financial crises that reshaped economies and destroyed wealth. From market bubbles to global recessions, the patterns are clear, and yet, history keeps repeating itself. But here's the good news. If we learn from past mistakes, we can make smarter financial decisions in the future. Today I'll break down some of the biggest financial disasters, explain what went wrong, and show you how to avoid falling into the same traps. Let's start with one of the most infamous crashes of all time. First up, the dot-com bubble, the internet gold rush that crashed. The late 90s were wild. The internet was booming, and investors were convinced that every tech startup was the next Microsoft. Companies with no profits, sometimes not even real products, were suddenly worth billions. The hype kept growing, until it didn't. By 2000, reality hit. The bubble burst, and the stock market wiped out $5 trillion in value. Countless investors lost everything. Lesson learned. Hype doesn't equal value. Just because everyone is talking about a hot new investment, whether it's AI stocks, crypto, or NFTs, doesn't mean it's a guaranteed success. Always do your research. Next, the 2008 financial crisis, the House of Cards collapse. This was one of the worst financial disasters in modern history. Banks handed out risky loans, people took on massive debt to buy homes, and the entire system became a ticking time bomb. When the housing bubble popped, banks collapsed, millions lost their homes, and global markets spiraled into chaos. Governments had to step in with massive bailouts just to keep the system from collapsing completely. Lesson learned. Debt can be dangerous. Whether it's personal debt, national debt, or corporate debt, too much of it leads to disaster. Be careful with leverage and always have a financial safety net. Then there's hyperinflation, when money becomes worthless. In countries like Venezuela and Zimbabwe, reckless money printing led to complete economic meltdowns. Imagine going to the store and seeing prices double every single day. That's hyperinflation. Savings became worthless and people struggled to afford even basic necessities. Lesson learned. Inflation is a silent wealth killer. The best way to protect yourself? Diversify. Real estate, commodities, and foreign currencies can all act as hedges against inflation. Lastly, crypto booms and busts. The digital gold rush. Bitcoin, Ethereum, NFTs. We've seen multiple cycles of explosive growth followed by brutal crashes. In 2017, Bitcoin soared to $20,000, then crashed to $3,000. In 2021, it hit new highs, and then dropped by over 70%. Lesson learned? There's a big difference between speculation and investing. Timing the market is nearly impossible. Instead of chasing quick gains, focus on long-term, well-researched investments. So what does this mean for 2035? Are we repeating these mistakes? If you look at today's world, you'll see signs of AI bubbles, increasing debt, and extreme market speculation. The same patterns keep appearing. But here's the thing. The future isn't set in stone. The smartest investors don't try to predict the future, they prepare for it. And that's exactly what we'll explore in the next video. How will the financial world look in 2035? What should you do today to protect your wealth? If you want to stay ahead of the game, make sure to subscribe. You won't want to miss this.